Welcome to this month's portfolio update. As usual, I hope you'll find this information useful, but disclaimer, please note that this is not investing advice. It's just my portfolio as it stands on Saturday, July 30th, and it can change at any time without previous notification. Following an investment strategy without doing the work yourself is almost guaranteed to result in losses. So please be careful, since it's your responsibility to do the research before investing. I usually do these updates after the first of the month, but because this will be on Monday, the only thing that can change in price are the crypto assets. So if there is no big crash or growth this weekend, it should be a good representation of my portfolio as of August 1st before the opening bell. Anyways, without out of the way, let's begin discussing last month's activity. This was also one of the best months ever because I made also 0 buy or sell transactions, making it the second month in a row in which I didn't trade anything. As mentioned, my long-term goal is to hold for a very long time, since, as Charlie Munger put it, the big money is not in the buying or selling, but in the waiting. I am also asked relatively often, what should I buy? Or what do I think of this stock, or this crypto, or maybe gold? That is why, at the end of this video, I am touching a little bit on the concept of risk and how I view it. So stick around, maybe you will find it interesting. That being said, let's come back to this month's activity, where I received a dividend payment from Transgaz, which is the natural gas transporter monopoly from Romania, and also my individual biggest stock position. I'm happy that they left the dividend tax at 5%. As mentioned last month, there was a possibility of changing it up to 8%, starting at the moment when the government decision was to be published in what it's called the official monitor. However, this will start applying at the beginning of next year, so a small win for the home team. Hooray! I also received this month a sizable bond coupon payment from my Romanian 5-year bonds, so overall it was a good month to build back my cash position. Anyway, this is my current portfolio as of August 1st, 2022. Overall, the currently invested portfolio is 1.2% up since last month, which sounds great. However, actually, it is still down 11.5% overall. However, this metric is a little bit confusing because, again, it is the currently invested portfolio, and it doesn't really count the money that I took out as dividend payments or the profits that I made when selling. However, because I don't transact that much, this is still a good representation, I think, of how things are moving. The biggest mover this month were the China assets were down about 10%. Because of some bad news coming from China. Alibaba yesterday alone, I think, was down something like 11.6%. which of course is not great. Also, my cash position increased due to the dividends and bond coupon payments, and stocks and crypto were a little bit up this month. The allocation pyramid is as follows. You can see a 1% increase in cash due to the aforementioned dividends, and there is a slight rebound in crypto. Bonds and real estate allocations are a bit down, not because I lost anything, but due to the price movement of the other assets in the portfolio. It just changed their slice in the overall allocation. If you found this information useful so far, please don't forget to like and subscribe. It really helps a lot. As promised today, I also want to talk a bit about risk. There is a saying, never forget the 6-foot-tall man who drowned crossing the stream that was 5 feet deep on average, which basically means that surviving on average isn't really a thing. You need to survive on the worst days. That's when surviving counts. This also applies very well in the stock market, where you don't have to be safe all days, but you have to be safe when it counts. This is one of the main concepts of Nassim Taleb's insert of book series, The Black Swan, Anti-Fragile, Fooled by Randomness, etc. That risk cannot be predicted, and believing that we can predict risk might actually hinder than help us, especially when the event that we in quotes predicted is really unknowable and proves to have a huge negative impact on our portfolio. Remember the 2007 global financial crisis. So, what is risk? Let's take an example. You buy 100,000 worth of Dogecoin today and in 6 months it doubles. Was that a good decision? We can all agree that yes, it was a really good decision, right? While most people would say yes, it was a great decision, the truth is we can't really know even after the fact, because it depends. How much money did I have? If all I had was $100,000 and when I put it in, if I lost it, I would be homeless, would still be a good decision? Secondly, what was the probability of it doubling versus the probability of it dropping in price? Was it a fluke? And next time when I do this, I will lose my shirt? Or was it a smart decision done after I researched a lot? Predicting risk is a difficult thing because we don't really know if a decision is good even after the fact. So we can imagine how hard it is to know beforehand. The key word here is knowing. Because we don't know something, it doesn't really mean we can't play the odds, but we have to be careful. As Ray Dalio, Bridgewater Chief Investment Officer, billionaire, and author of the Principles book series said, "When I know that I don't know which way the coin is going to flip, I try to position myself so that it won't have an impact on me either way. In other words, I don't make an inadvertent bet, I try to limit my bets to the limited number of things I am confident in." Nassim Taleb, which I mentioned earlier, also has a good advice, which says something like having an edge and surviving are two different things. The first one requires the second. The main key in predicting risk is actually to become anti-fragile, meaning that no matter what unforeseen event is going to happen, we should still be left playing the game. Because the same as negative events happens all the time, so do positive ones. So the longer we are in the market, here read decades, the more of these positive things tend to happen and we can benefit from the upside. Some of the recommended strategies that I use is the barbell strategy, meaning splitting your assets 90% in safe assets, meaning no matter what happens, we can still make some money. Dividends, bonds, etc. And 10% in risky assets. Here comes the asymmetric risk reward, meaning making small bets on unlikely events. And if they happen, then we will win big. And if they don't happen, then we will not lose that much. And the third thing is that we need to be a contrarian, meaning not only to be pessimistic when there is a bubble-like optimism in the market, but also to start being optimistic when things seems to be bad forever. The famous saying, "Buy when there is blood in the streets," comes from this principle. You won't know if there are no more losses to come in the future, but after a certain point of pessimism, the odds of things starting to go up start to be in your favor. So this is my plan, and this is what I wanted to show you in the video today. If you are interested in more details about my investing approach, you can watch some of the older videos and maybe get some more specific ideas. Let me know what you think of this video in the comment section and have a great day. Good luck in investing. Bye bye.